What's up, everyone? It's Scotty with MoneyVest. So in the markets today, Dow Jones pushing up to almost 41,000 points here, up over 1.85%. So the rotation continues to be in full swing with the NASDAQ only up 20 basis points on the day. So massive amounts of outperformance coming in from the Dow Jones sector. Not to mention IWM, which is the small caps, was up a little bit over 2% on the day. I did a video on this earlier in the day as well, and how I'm doubling down and buying more shares of that particular ETF, considering that it's now starting to break out very, very nicely, and it's got more potential upside up to as much as 240s to my price target of $300 a share. So as always, if you enjoy this video and find it helpful, please make sure that you drop a like. I would really appreciate that, and subscribe to the channel if you haven't already. Links to our Discord and Patreon is going to be down below if you want to get access to all the buy and sell alerts, trade alerts, and of course options alerts and trade ideas as well as the MoneyVest beta launch and the early access to the entire platform. Link's going to be down below. There's a 51% discount available until the end of this month, as well as a 16% annual discount also available at the moment as well. And this right here is going to be the entire platform that you can access, do a full comprehensive fundamental analysis on individual stocks. And we're going to be adding a lot more potential features as a macro dashboard, portfolio analytics, as well as the MoneyVest index that's going to make its way over to this platform, which I believe is going to be super useful for you as well. So link's going to be down below. We'll love to have you on board. So first things first, the Dow Jones pushing up over 1.85%, so up to almost 41,000. The S&P 500 up 64 basis points, and the NASDAQ up a little bit over 20 basis points on the day, just over 18,500. I closed the day green also because the markets were obviously higher, but not on that, but on the back of course, Tesla stock pushing higher, up a little bit over 1.55%, but the portfolio was only up about 4,300, given that the VUG, SMH ETFs were obviously flat to somewhat down on the day. And this right here was the entire recovery that my portfolio made of over $9,414.75 intraday from its lows of about 7:40 p.m., which was about 40 minutes into market open. We obviously continued to sell off. Tesla stock was selling off, and then of course a reasonable recovery here intraday. So of course I was down at one point during the day, but then of course seeing a very nice recovery back to pretty much where we opened with the market open here. So about $4,300 gain with of course a $9,400 intraday recovery back to being positive. So moving forward to some of the reports, so Stifel reaffirms its forecast that S&P 500 will drop by 10% by October. So before we move forward, I do want to go over the MoneyVest index. I know a lot of you guys have been asking for the MoneyVest index. This is eventually going to make its way over to the platform, so need not worry. We are going to have it available for all the members exactly in this format, so you can do better, you can make better, more confident investment and trading decisions. And the crazy thing is that we are now at over 4.17. We're approaching that 4.5 level. This is a very, very important critical level. This is now a new entrance into this sort of 1, 2, 3, 4, 5, 6 sort of range for the MoneyVest index. Out of the 7 ranges that we have here, we're now entering into the 6th band, which again is somewhat deep territory of being cautious and being more careful with the markets, considering how overbought and overextended we continue to become, the concentration in the market, as well as the lower volatility, as well as the percentage of stocks now trading above or below this moving averages. Now, the reason why we're seeing such a massive move to the upside for this particular index now is because what's really happening in the markets is not clearly a rotation. It's not like we're seeing technology stocks every day continue to get dumped and money rotating out of those companies over to other parts of the market, especially small caps. What's really happening is that that part of the market, which is big tech and large cap, is stable, right? It's not really going down by 4 or 5%. It's not seeing a massive exodus in liquidity, but instead it's staying stable, and liquidity is coming in to other parts of the market. Something as similar as what I'm personally doing. I'm not selling my tech stocks to buy small caps. I'm keeping my tech stocks to also buy small caps because of the potential and the opportunity that I see with small caps. So it's not liquidity rotating out, it's liquidity entering. There's new liquidity entering the market with small caps and other parts of the market. More value side of the market is what's getting a lot of love as new liquidity enters the market. And that's exactly one of the reasons why the Money Invest Index is now higher, because we're seeing broader participation. We're seeing more stocks now trade above their moving averages, 50-day, 200-day SMA, as well as the volatility staying low, as well as, of course, pushing the entire market higher, the Dow Jones more so than the S&P 500. But this is, again, a significant amount of money moving towards small caps and IWM. So if you come over to this chart, this is something that we broke down in our video from this morning. IWM, I take it back, it was up over 3.4%, not 2%, not 1%, 3.4%. So once again, a huge amount of outperformance from IWM relative to the NASDAQ and, of course, the S&P 500. And this is exactly the chart that I broke down in my morning video. Again, if you want to get access to all the alerts, find out exactly what I'm buying, when I'm buying, link's going to be down below. It's going to be part of our Discord, and you'll be able to access all the trade alerts. And next target is pretty much going to be sitting at 233 for IWM. We're getting closer and closer to all-time highs. Another alternative for more risk-taking investors is going to be TNA. It was up a little bit over 10.2% on the day with a nice breakout, and the next target is going to be all the way up till here at close to $53, $54 per share, and that's going to be another reasonable 4 to 5% upside for TNA since it's a levered ETF. That's actually going to be a 9 to 10% upside for TNA since it is a bit more levered, right? So 3 times levered on the upside compared to the Russell 2000. So this right here, in my opinion, is where the money's flowing into. This is the play. The volume's also increasing, so you'll notice that 68 million volume in terms of shares traded versus 28 million. So that's 2.5 times relative volume. So significant amount of money flowing into this ETF. Lots of potential left, in my opinion. This is where the play is. Now moving over to volatility, so it continues to stay low, down to 13.2. Keep a close eye on the Money Invest Index as it continues to push higher and higher. It's more and more cautious and careful that we need to be in the markets, considering how we are now getting up to that 6th range, 6th band here. And eventually we do know there's a pullback or a correction coming. I also want to break down some of the seasonality charts. So this right here is going to be the monthly returns since 1950s. And as we know that September is the worst month for the stock market, as witnessed by many, many Septembers that we have lived together. But this right here, September being the worst month for the markets across the board, the percentage of times it is actually positive is very, very low at 44%. So that is, again, a very low number in terms of the percentage of times September is a positive month. So majority of the times, 56% of the time, September is a negative month by on average about 0.5%, sometimes even more brutal. We've seen 7, 8, 9, 10, 12% negative returns in the month of September in our previous years. And even October. October is another month. Over the last couple of years, however, if you'll notice, come back over to the S&P 500, we have seen negative months for the month of October. Not necessarily month of October being negative, but October has represented a very good buying opportunity. So this right here was back in October of 22. This right here was back in October of 23. So if you do see another October 24, a bit of a pullback or a correction or a dip, it's going to represent buying opportunities very, very clearly because that, again, is somewhat, and this right here is October 21. So every October also we've seen some momentum to the downside. It's kind of like a follow through from the September sell-off that we see the markets kind of bottoming out in October. In other words, September is a negative month. October is a buying opportunity. Again, September is a negative month. Seasonality wise, it's the worst month. October is a buying opportunity for us because the last 3 out of 3 Octobers, we've seen the markets bottom out in some shape or form and then continue to push higher. So keep a close eye in that market seasonality because it's only going to represent buying opportunities. And if that correlates well with the Money Invest Index coming down to, let's say, 3 or sub 3 or 2.42, it's going to represent pretty solid opportunities for us to dollar cost average into the market. Now this right here is going to be Nvidia down about 1.6%, Google 1.4%, Meta 1.2%, Microsoft down about 1%, Tesla still managed to eke out a gain of 1.5%, Apple and Amazon also pushing higher. This right here, again, the entire market, so a lot of money flowing out of some of the more bigger tech names over to other parts of the market, but this is still a stable sell-off. This is not a mass liquidity coming out of these big tech companies. Yes, 1.5% sell-off is still a decent sell-off, but at the same time, they obviously have rallied quite a bit. We're talking hundreds of percentage points, so a small pullback to move liquidity away from those sectors and stocks over to other parts of the market is still very reasonable. So we are seeing money entering new money and new liquidity entering the market with of course buying small caps and other sectors in the market. So this right here is the one-day performance. So comm services is the only sector selling off in the last 1 week. Once again, comm services down about 2% in the last 1 month. All 11 sectors are green, with oat prices, lean hogs, palladium, cotton all pushing higher, with ethanol, orange juice, and cocoa prices selling off. Bitcoin just over 65,000, Ether just over 3,400 as well. Now coming over to the market, so S&P 500 first. If you take a look, we are still pushing higher than the all-time highs, so 56.67. RSI, MACD, very, very overbought as the index continues to trade near all-time highs at 5667. Support level is going to stay put down at 5440, and that's going to represent about a 4 to 5% dip for the market, about a 4% sell-off, which again is not unlikely, something that we could expect from the markets here. And as we continue to trade at all-time highs, I think it's really important for us to remain cautious, remain alert, that yes, we are seeing some broadening out of the entire market, as a lot of these individual indexes, in other words, the percentage of stocks trading above or below their moving averages, now trading back up to very, very high levels. So for example, S5TW, percentage of S&P 500 stocks trading above their 20-day moving average, it's back over 84%. And this again is a level that we haven't seen since March of 24. So since earlier this year, when we obviously did witness once again a decent sell-off, where this index pretty much dropped over 92%, coming back down to the same level as 6% of stocks trading above their 20-day moving average. So 94% were trading below the moving average. And if you correlate this March 24 sell-off with our MoneyVest index, you'll notice that March 24 was all the way down here. This is March and April of 24. So this was the level, which was the last serious buying opportunity. And once again, if you come over here, this was the March and April of 2024. So last serious buying opportunity before seeing that very nice recovery back up, before of course seeing that recovery back up on the MoneyVest index as well. So it really correlates well with some of these indexes that help us understand and identify opportunities from a risk reward standpoint. And this number once again pushing back over to 84%. Another number that I really want to pay attention to is the percentage of stocks trading above their 200 simple moving average, and we're once again back over 78%. The last 3 days you can see that more and more stocks have become have seen that momentum to trade back above their 200 simple moving average. So the higher this number goes, the more cautious we need to be, the more overbought, the more overextended we are. Of course, we are on a very nice uptrend. We're on a very nice consistent bull market, but this has been a very nice proven track record indicator for us to identify where risk reward is favorable versus when it's not. And right now, of course, we're approaching that red zone, so that meaning that it's not starting to look very lucrative in terms of those opportunities in the market. So just got to be super careful at those levels here in the market. So again, we're going to be keeping a close eye. I'm going to be sharing my analysis, of course, sharing my alerts, sending out alerts in the Discord to really identify when there is really clear buying opportunities, like I did back in April of 24, back in October of 23, and of course back in October of 22 as well. So MoneyVest Index is going to be my guide, and even November in 23 is going to be my guide to make better investment decisions and tradable decisions, as it's proven to be a very, very strong indicator for me. So moving over to the NASDAQ, IXIC. So again, you'll notice continues to consolidate sideways. If you come over to the 30-minute time frame, we were seeing some lower highs and some lower lows as that continues. So NASDAQ here, very, very modest 20 basis point gain. And this right here was the lower highs and the lower lows. And right now, support level is going to stay put down at 18,375 for the NASDAQ. So that's going to be the level to keep in mind for this particular index. Now moving over to Apple. And Apple here starting to consolidate sideways, so up over 18 basis points, but really just a bit of a doji candle, so a lot of indecision. It is extremely overbought and overextended, so I would not be surprised if Apple does see a bit of a pullback or a correction or some profit taking of some kind, considering how overbought it really is. And support level is going to stay put down at $218, $220 for Apple. Talking about Amazon, and Amazon here continues to pull back from its $200 resistance. Support level is going to stay put down at $188, all the way down to $171 for Amazon. Again, incredible company with massive potential for profitability, but support level is going to stay put down at $188, down to $171 for this company. Talking about Tesla, and Tesla here managed to, again, close out the day with an entire gain of 1.5%, back over 256. We've got a massive resistance, as we've discussed, in the 260s. So this right here, very, very important resistance level. to watch for Tesla, all the way up to as much as 275 to 296. Massive area of supply for the company there. RSI did pull back after the sell-off last Thursday. RSI MACD also a bit more on the overextended and overbought side, but support level is going to stay put down to 254, down to as low as 233 for Tesla. Talking a little bit about PayPal, and PayPal here on the day also recovering really well, up a little bit over 2.2%. Perhaps this was one of the reasons why my portfolio is up quite a bit as in just a modest amount, more than the NASDAQ, I would say. But because of that reason, $61.81 is where we are. RSI MACD showing signs of some progress, and of course, next resistance and target is going to be $65. And once again, we saw a bit of an increase in the L3 banker oscillator, suggesting for some institutions and some investors, some whale investors, starting to buy back into this stock as well. And next target is going to be all the way up to $65 for PayPal. Talking about Visa, and Visa here also started to move back higher. We're going to go ahead and turn this level back into a support for the stock, sitting roughly at 270s, 270, 265. And that right there is going to be that support with the next target and resistance all the way up to $282 for Visa as well. Talking a little bit about NVIDIA. And NVIDIA here consolidating sideways, so really just a range-bound pattern with a support at 118, resistance all the way up to 141, and a lot of consolidation sideways for NVIDIA with the support level staying put at roughly 118 for this company. I saw someone post in our Discord that NVIDIA's price target is down to $80 a share by I think a certain month, October or November, which again, nobody can really predict with any accuracy where the stock prices are going to be 1 month from now, 1 day from now, let alone 1 month from now. So I think it's really just not the best sort of approach. I think a much better approach is to understand that we can't predict prices. We can't predict anything in the market. What we can really do is just look at the present, understand where the prices are and whether it makes for a good or a bad deal, and understand the support and resistance levels, areas of supply and demand. And again, analyze things from a perspective of risk and reward. It's all about risk and reward and opportunity cost for us to understand certain things. Because if you are, let's say, buying a certain stock like NVIDIA, for example, at a support of 118, you have to be better sure of a couple things. Number one, 118 is a strong support. 118 is an area of demand. If it doesn't, if it breaks down, you've got a contingency plan in place where you can get out. You've got a stop loss if you're trading it. And also be sure that there's no better opportunities for you out there for your money. Because at the end of the day, capital preservation is incredibly important. This is where most people get it wrong, is that they believe that it's all about reward, it's all about returns, it's all about profit, where capital preservation completely gets ignored, and that's where risk starts to creep in and takes away your capital. So really, it's first the game of capital preservation, analyzing risk, reward comes after, it'll take care of itself, but really just analyzing risk and focusing on capital preservation. Now moving over to advanced micro devices, and AMD of course has been pushing higher really nicely over the last couple weeks. Resistance and target's going to be closer to around 185. That's where it's been getting rejected more recently. Support level is going to stay put down at 150s, 147 for advanced micro devices. Coming over to Meta platforms here, Meta also starting to roll over a little bit, down about 1.2%, back under $500. Next support level inside this green rectangle, inside this range and area of demand, setting roughly at 450 to as much as 475 for Meta platforms. Netflix is going to be coming out with their earnings, so if you come over to Netflix over here, and let's take a quick look. By the way, REITs are also available on our platform now, so you can take a look at Realty Income Corp or American Towers or any of the other REITs, over 420 REITs that are now available on our platform as well. Now coming over to fundamental analysis, if you go to analyst estimates, we do still have a buy rating on Netflix with 17 holds, 21 buys, 1 sells. High target of 840, low target of 454, and an average target of 669. And for the quarter that they are going to report that's coming up, Netflix is expected to report an earnings of about $4.84 for the second quarter 24. $4.84 is what's going to be that number, 473 on TradingView, and revenues of $9.5 billion. And based on our platform analysis, for the second quarter, revenue expectations from analysts at over 33 analysts, $9.7 billion is going to be that number. So 9.52 is going to be on TradingView. So support level is going to stay put down at 651, resistance all the way up to $702, $703 a share for Netflix. Talking about Google, and Google also starting to roll over. Not a surprise, down about 1.4%. Next support down as low as 180, down to 173 for Google. Very nice, consistent uptrend of higher highs and higher lows, but those right there are going to be next support levels to watch for this company. Talking about Microsoft, Microsoft also showing signs of some weakness, starting to roll over, down almost 1%. Next support down as low as 433 to as low as $417 per share, and as well as $400 per share also available for Microsoft as an area of support and demand for the company. And last but not least, we got Enphase and Costco. Enphase continues to struggle a little bit, so we're starting to see a little bit of that momentum higher. Support level is going to stay put down as low as $112, $113, with a resistance and a target all the way up to as much as $142 per share for Enphase, and support level is going to stay put roughly at as low as $106 for Enphase. And finally, we come over to Costco. And Costco here, support level is going to stay put down to $840, down to low as $785 per share. A lot of consolidation sideways for this company as well. So hope you all enjoyed this video and a complete update on the markets. Make sure that you do check out the MoneyVest platform. 51% discount right now that you can lock in until the end of this month. You will have access to this entire platform where you can do your full comprehensive fundamental analysis on individual stocks, as well as do your portfolio management, get an aggregated view of your entire portfolio in the future, as that features are going to be coming out very, very soon, as well as our macro dashboard, the MoneyVest index, the fundamental and technical positioning of the entire market, and a lot of really amazing features that we're going to be building over time. So link's going to be down below. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.